Boost your credit score fast, the ultimate guide. Welcome back. Today, we're diving into how to improve your credit score, and fast. Whether you're dreaming of owning a home, getting a new car, or building a solid financial foundation, your credit score is key. So, if you're ready to unlock better financial opportunities, stick around because I'm about to break down the exact steps you can take to make it happen. Know your score. Check your credit report regularly. Before boosting your score, you need to know where you stand. Your credit report is a detailed record of your credit history. That's where your credit report comes in. It provides a comprehensive overview of your financial behavior. Think of it as your financial report card. It shows lenders how responsible you are with credit. You can get a free credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every year through annualcreditreport.com. This is a great way to stay on top of your credit health. Checking your own report is a soft inquiry and doesn't impact your score. It's a safe way to keep tabs on your credit. Make it a habit to review your report at least once a year, or even better, every 4 months. This way, you can catch any issues early. Why? Because sometimes there are errors. These mistakes can negatively affect your credit score. We're talking about incorrect information, accounts that aren't even yours, or outdated data dragging your score down. These errors can be costly if not addressed. Catching these errors early and getting them fixed can make a huge difference in your score. It can save you money and improve your creditworthiness. So, make sure to check your report regularly. It's a small step that can have a big impact on your financial future. Fight back dispute errors on your credit report. So, you've checked your credit report and found some errors. Don't panic. This is a huge opportunity to boost your score. Even small errors can have a big impact. Disputing errors is straightforward. Contact the credit bureau directly, either online or by mail, and explain the inaccuracies. Provide as much documentation as possible to support your claim. The credit bureaus have to investigate any disputes within 30 days, and if they can't verify the information, they have to remove it. Sometimes just sending a dispute letter can be enough to get those pesky errors off your report and boost your score. Keep track of all correspondence with the credit bureaus, and follow up if you haven't heard back in a reasonable amount of time. Chapter 3, Slash Your Debt. Pay down high credit card balances. Let's talk about credit card debt, the silent killer of credit scores. It's easy to let those balances creep up, but they can have a devastating impact on your financial health. One of the biggest factors that influence your credit score is your credit utilization ratio. This ratio measures how much of your available credit you're using. The lower your credit utilization, the better. Keeping this ratio low shows lenders that you are responsible with your credit. Ideally, keep it below 30%. This means if you have a credit limit of $10,000, try to keep your balance under $3,000. If you're carrying a high credit card balance, get aggressive about paying it down. This will not only improve your credit score, but also reduce the amount of interest you pay. High balances hurt your credit score and mean you're racking up interest charges. The longer you carry a balance, the more you pay in interest. Start by creating a budget and identifying areas to cut back on spending. This will free up more money to put towards your debt. Prioritize paying down your highest interest credit cards first. These are the ones costing you the most money. This strategy, known as the debt avalanche method, saves you the most money in interest over time. By focusing on high-interest debt, you reduce the total amount you pay. Another option is the debt snowball method, where you focus on paying off your smallest debt first, regardless of the interest rate. This can provide quick wins and keep you motivated. Chapter 4, History Matters. Keep old credit accounts open. Resist the urge to close old credit card accounts, even if you don't use them anymore. The length of your credit history plays a significant role in your credit score. The longer you've had credit accounts open and in good standing, the better. Closing old accounts can shorten your credit history and potentially lower your score. Those old accounts are like vintage wine. They get more valuable with time. If you're tempted to spend, tuck them away in a safe place, or even freeze them in a block of ice. The point is to keep them open, but inactive. If you're worried about overspending, consider keeping the accounts open, but reducing the credit limits. Chapter 5, Mix it up. Diversify your credit mix. Having different types of credit like credit cards, installment loans, and mortgages can significantly boost your credit score. This variety in your credit portfolio demonstrates to lenders that you have the ability to manage multiple forms of credit responsibly. It shows lenders that you can handle different types of debt responsibly. This is crucial because it indicates that you are not overly reliant on one type of credit, which can be a red flag for lenders. Manage all your credit responsibly. Make your payments on time, keep your balances low, and don't apply for too much credit at once. Consistency in these areas will help maintain and even improve your credit score over time. One way to diversify your credit mix without taking on new debt is to become an authorized user on someone else's credit card, like a parent or spouse with a good credit history. This can be a strategic move to build your credit profile. This can give your credit score a nice boost, especially if you're new to credit or trying to rebuild your score. The positive payment history of the primary account holder will reflect on your credit report. Just make sure that the primary account holder is responsible with their credit, because any late payments or high balances on their part could negatively impact your score as well. It's a double-edged sword, so choose wisely. So diversify your credit mix wisely. A well-rounded credit profile can open doors to better interest rates and more favorable loan terms in the future. And there you have it. By following these steps, you can see a significant improvement in your credit score in no time. Remember, building good credit is a marathon, not a sprint. It takes time, effort, and consistency. A good credit score opens up a world of financial opportunities, from lower interest rates to better loan terms, and even higher credit limits. It gives you the freedom and flexibility to achieve your financial goals. Start taking action today to boost your credit score and unlock your financial potential. Don't forget to like, subscribe, and hit the notification bell so you never miss out on our latest financial tips and tricks. Thanks for watching, and we'll see you in the next video.